Hi everyone, my name is Edwin Ho, and I'm the Client Advisor Lead at Endowus Hong Kong. We are Hong Kong's first fee-only digital wealth platform that takes no commission from clients. Amid the growing expectations that the Federal Reserve's rate hiking cycle is approaching its potential end, income-seeking investors are finding renewed appeal in dividend-paying stocks. Income-hungry investors are increasingly seeking dividend opportunities in anticipation of potential declines in Treasury yields. It is clear that dividend strategies play a crucial role in the playbook for income investors. We are pleased to invite Jochen Breuer from Fidelity International to join us today. He is a portfolio manager and has 16 years of investment experience and is currently responsible for managing Fidelity's Asian equity income strategies, as well as co-managing Fidelity's global enhanced equity income strategies. Let us take a closer look at dividend stocks amid this rate hiking cycle uncertainty. How does Fidelity define and select good quality dividend stocks?
At Fidelity, we have a very strong research platform with more than 120 analysts globally, and we pride ourselves in bottom-up research. When it comes to dividend stocks within the equity income team, we are looking for a couple of things. First of all, quality. So we're looking for simple business models, companies that can generate attractive and defensive through-cycle returns, companies with strong balance sheets and good cash generation, and importantly, management teams that have shown good capital allocation over time, which includes the dividend payouts to investors as well. The second thing we focus on is valuations. So we're very valuation conscious, and we want to make sure to limit the drawdown or downside risk for investors in the companies that we're investing in. And finally, we are also obviously considering the income. But what we're trying to achieve is a total return for investors. So we're not reaching for necessarily the highest yield out there, but we want to invest in companies which can deliver a sustainable investment yield for investors.
With economic uncertainty in much of the first half of 2023, how does it affect Fidelity selecting dividend stocks and also maintaining a sustainable dividend payout for investors?
What we're looking to achieve for investors within our equity income range is to deliver a dividend-based total return, where the dividend is an important part of that total return for investors over time. And we're trying to achieve that with lower risk characteristics than the market, so lower volatility as well as lower drawdowns in periods of market stress. I would say our approach to equity income investing in this period, which is certainly more uncertain than the past, hasn't really changed. So what we're looking for is companies with strong balance sheets, good cash generation, and companies that can grow their dividends over time for investors.
And for the rest of 2023, what is Fidelity's view on the macroeconomic environment? And what's your view on the rate hike path from the Fed? How does it in turn impact the dividend strategy for Fidelity?
That's a really good question. I can't really talk for Fidelity, as my colleagues might have different views, but here's how I see it. I think we currently live in a very uncertain environment. There's question marks around hard landing versus soft landing of the global economy, which obviously impacts the trajectory of rates. And finally, we also have significant geopolitical tensions currently in the world. So in my view, in this environment, it pays to be defensive and to focus on downside risk. And we believe that our equity income solutions can provide that for investors. So really what we're focusing on is quality companies through focus on valuations and strong balance sheets and making sure that those cash flows that the companies generate cover the dividends that are paid to investors.
Turning to sector specifics, we see a significant exposure to financials across dividend-focused strategies in globally and also Asia focus. How does this drive Fidelity's confidence in the sector and also dividend payout strategy?
The financial sector is obviously an important one globally. The first point I would make about our exposure across the strategies is that most of the companies we invest in are non-bank financials. So those would include exchanges and insurers, for example, P&C insurers. And those businesses are less cyclical than your average bank. They have less balance sheet leverage and provide sustainable dividends. That is not to say we don't invest in banks at all. When it comes to Asia specifically, one has to recognize that a significant part of the investable universe are state-owned banks, though which we tend not to invest in. But we do find very attractive banking franchises in Asia, which, especially in this current interest rate environment, generate very attractive returns and which are willing to share some of those returns through buybacks and dividend payments with minority shareholders.
The real estate sector tends to dominate the Asian investing landscape. So given the current environment where interest rates are a lot higher than a year ago, how does Fidelity assess and also monitor in case of any concerns about the excess use of leverage?
I wouldn't say real estate dominates the investment landscape, but it certainly is an important topic, particularly if we talk about the Chinese private developers as well as commercial real estate in the rest of the world. What I would say, though, is that real estate is a very local business with local supply-demand dynamics in each local market. And so it's very kind of case-by-case basis. And where we do find attractive ideas is in some of the landlords where interest rates have led to lower valuations, but generally these businesses tend to generate very sustainable and steady returns for investors.
Thank you again, Jochen, for your time and sharing. To our viewers, we hope these insights will help to guide your investment journey. Subscribe to follow Endowus on YouTube to stay updated on our video content. To find out more about what Endowus offers to investors, please contact us via the links in the description below.